What's up, guys? Today we're going to look at investing for beginners in the UK, the basic knowledge that you need to know to get started in the stock market. Why are we looking at this? Well, first off, as a banker that's worked in the industry for 13 years now, I've come across a lot of high net worth individuals, and 9 times out of 10, their wealth is linked to the stock market in one way or another, either through them investing directly into it over the long term or from entrepreneurship, creating and running companies that get listed on indexes that increases their wealth and that they can draw an income from. The stock market is a great way to build wealth, and you really want to participate in it to make it work for you. There's a lot of great companies out there and you can benefit from their success by investing. There's a reason why pension funds, insurance companies, and most millionaires, billionaires put large portions of their cash into the stock market. So today I'm going to take you through the investing basics for beginners, what stocks are, how they work, why they're worth investing in, and where you can buy them.
What's up, guys? It's your urban educator Warren Goslin back with another financial wealth building video. If you'd like to show your support for this channel, please do so by hitting the like button and subscribing. That really helps, and recommend this video to somebody else on their wealth building journey. Appreciate the continued love and support from you guys. Peace.
So firstly, what is a share? A share, as the name suggests, is a share of ownership in a company. Ownership is where it's at, guys, when it comes to wealth building. Think of a company like a pie, and what owners of companies do is that they slice up that pie into thousands or sometimes even millions of pieces, and they allow the public to buy these slices in the stock market. And when you own part of these companies, a slice of the pie, it entitles you to a share of the profits that that company makes in a given year, should they choose to distribute them. Now, shares are usually for public listed companies. These are companies whose shares are made publicly available, as the name suggests, to buy and sell by people like you and me and other institutions. And there's good news, guys, news that you probably haven't heard yet, and that's that there's nothing stopping you from owning parts of these companies. Whichever company that's listed on a stock exchange, it's available, guys, for you to invest in and participate in, which is what I want you to take away from this video. Above all else, guys, I really want to change your mindsets from consumers to owners. So we all love, say, Apple products, iPhones, and it's great. I have an iMac myself, right? We buy these products, but we can also own part of the company. And you can find these companies on most investment platforms, which are basically an admin system where you can buy and sell shares in those companies. You might have heard of platforms such as eToro, Trading 212, FREETRADE, etc. If you want to sign up to any of these and receive some freebies, check out the links in the description below, guys. So why are shares worth investing in? So I mentioned at the beginning of this video that wealth building and ownership are closely linked, and you can and should participate in this at any time. Now more than ever, with the various investing apps out there, stock market participation really is accessible to everyday people like you and me. Literally in your pocket, just a few swipes and button clicks away, and you don't have to be an expert or a qualified genius to participate. If, like me, you're looking to make money from shares, there's a few things that you need to know about how returns work. There's 2 key ways in which people build wealth from shares. The first is the growth in the value of a share, and the second is the dividends that the share pays out. I like to use a property analogy when it comes to describing shares because I also invest in property, and most people tend to understand the basics of property because for the most part we've all lived in houses and we all know how they work. So owning a share is a lot like owning a property. When you own a property, it can go up or down in value, which of course impacts your wealth, okay? The rise in the value of a share is called capital gain, and a fall is called a capital loss. So you might have heard these terms before, but it's really just a name for the rise and fall in the value of it. And shares rise and fall in the same way. You can either benefit from capital gains or losses. When you own a property, you also receive rental income, and the equivalent with shares is the dividend income, which is the amount of profits that a company makes over a given year, which they choose to distribute to shareholders, i.e. me and you, people like us who own those shares. Now, not all companies choose to pay dividends. If a company is, for example, not making profits, say it's made a loss in a year, it will most likely not pay out a dividend that year. And you may even have a company which makes a profit but chooses not to pay dividends because they might be, say, reinvesting money back into the company to grow it or for some other reason. So what you want to do if you're looking to get dividends regularly, choose a company with a regular track record of paying dividends to shareholders. You can Google this, guys, and they tend to be larger established companies like your Googles, your Netflix, your Amazons, your big banks, okay? So in summary, in terms of making money by owning shares, you have two streams of returns with stocks and shares: capital growth and dividend income. Now you might be wondering, what kind of returns can I make as a stock market investing beginner from owning shares? And that's a good question. So over the last 5 years in the UK, the FTSE 100 stock market has grown by 27% and 61% over the last 10 years. This is with dividends being reinvested. So instead of taking your dividends as income, you reinvest them and you buy more shares. That's basically what it means. So if you'd have invested, say, £1,000 in a bog standard UK FTSE 100 index tracker 5 years ago and did absolutely nothing, you just left it there, you'd have £1,270 today. And if you did that 10 years ago, you would have £1,610 today. And that's just the UK FTSE 100, guys. I'm using that as the index because we live here. I invest in funds, which we'll come on to a bit later, and have managed to outperform those returns, okay? So investing is a good thing to do in summary, guys, over the long term, and history proves that. So how do shares work? In addition to return, certain shares also give you voting rights in the company, and this depends on their class, usually whether they're ordinary shares or preference shares. So preference shares give a holder voting rights on certain decisions that the company makes. So they're not just about returns, guys. You do get a return from preference shares, usually a fixed return. So for example, someone like Elon Musk, right? He owns Tesla. He will likely have a number of preference shares that give him control and voting powers over Tesla to steer the direction of the company and have a say over the key strategic decisions that are being made. Whereas everyday investors like me and you, investing beginners, we will generally tend to hold common stock, so we don't get voting rights, but we get dividend payments, okay? Now let's talk a little bit about risk. This is very important. As a banker, I specialize in risk, so we do need to talk about this. As an investing beginner, it's important for you to understand risk because I really want you to make wise, long-term, sustainable investing decisions that help you to earn a return whilst also protecting that return at the same time. So the stock market is inherently risky. So what do I mean by that? It goes up and down and there's no way you can avoid that risk. You can't manage it away. So you need to be able to navigate that wisely, okay? And how do you do that? One word, guys: diversification. What is diversification? It's basically not having all of your eggs in the same basket. So let's do an example in practical terms. If I own shares in just one stock, let's say it's Virgin Airlines, I'd have had a horrible last 12 months because, as we know, due to what was going on in the world with the virus, people have been locked down. They ain't traveling anywhere, okay? They're locked up. And this particular airline actually went bankrupt over that period. So I'd have lost all my money if I'd have had shares in that one stock. But if I'd have owned, say, Virgin Airlines stock, as well as, say, Amazon, I'm now protected to a degree. How? Because Virgin Airline stock, yes, that would have evaporated and I would have lost everything. But Amazon did exceptionally well over the last 12 months because people were at home, people were ordering more off of Amazon. I definitely was, you probably were. So depending on how much I held in each stock, I could have actually come out of that ahead with a profit still. So the key is to spread your investments across multiple stocks. How can you achieve that easily? A great way, guys, is via funds. Now, a fund is a combination of many different stocks. I like to think of it like a Lego block with different blocks, and it's all one stack, and those blocks form one stack. So if you're investing in a single fund, you're actually investing in all the stocks within that fund. So you might have a fund that's made up of, say, Nike, Google, Amazon, Apple, all in one, guys. So you're achieving diversification by default. I personally invest in funds. The bulk of my money, I'm talking about 80% or more even, is in funds. If you want more detailed tips on exactly how I invest in funds, I'll be putting together a free ebook over the coming months on how to invest. So keep an eye out for that on my Instagram, guys. Go follow me, by the way. I'm at Warren Gosling, quick plug. So I'll be launching it over there, guys. So that's today's video on investing for beginners in the UK, guys. That's what shares are, how they work, and how you can invest in them and make money. I hope that you found it helpful. Please like and subscribe. That really helps, and I'll see you guys next week.